Hello, listeners. Welcome to another issue of REIKnowledge.com archived newsletters. You've heard of books on tape? Well, this is newsletters on tape. REIKnowledge.com, where we tap into the minds of seasoned real estate investors, learning from their mistakes, leveraging their successes, and we are firm believers that you should always be learning. In this issue, we're going to talk about multifamily sales and what they're doing in the current market, as well as a golden nugget called the Great Pause. Our golden nuggets are supplied to us by contributors who have hands-on experience and knowledge from deals done. These are not self-proclaimed gurus. These are ordinary people like you and I that are out there doing deals, making mistakes, learning lessons, and they're sharing those lessons with us so we can share them with our readers and our followers. Of course, we have contributors and supporters. Our supporters are what help us cover the cost of our media platforms to be able to service our readers. Let's talk for a minute about multifamily sales. Now, what exactly do we mean by multifamily? In this case, it is large apartment complexes where, let's say, they're 100 unit or more, 300 unit, 500 unit, 1,000 unit. These are your large apartment complexes, and it doesn't matter whether it's what they call A class, which is top of the line, granite counters, stainless steel appliances, B class, which is your average, or C or D, which are your lower end properties. Across the line, things are taking place in this industry. Bottom line, there will be changes taking place in the multifamily property market for probably well over the next 12 months, maybe even more. By the way, these changes will not be positive. There have already been some foreclosure measures started and bankruptcy filings inked as well, with signs that many more will follow. What's causing this downturn in multifamily? Honestly, the rise of interest rates. Your multifamily operators had rate locks on their mortgages, but those rate locks are expiring. And of course, they're now being written to the new rates. No longer are they in the 3 and 4%. Now they're in the 7 and 8%, which means much more cost for the mortgage, much less cash flow for the property. In some cases, taking it into the red. In other words, they're not making money because now they have a higher cost of keeping the doors open on the units. They can't raise the rents because the market drives the rents, or else they'll lose tenants. Best they can do is try to reduce overhead costs and try to renegotiate their interest rate and their mortgages with their lenders. It's tough right now for multifamily operators. Let's take a minute and talk about the supporters that support our industry. Everything from Rehab Financial Group, which offers 100% financing of purchase and rehab financing or new construction on 1 to 4 unit properties. They will go larger on unit size for experienced operators. Of course, we have Lone Oak Coffee Company, which offers us the Frostbite Winter Blend. That'll definitely wake you up in the morning, even if it's not winter. We have businessmasters.com, which is a place where you can design your own professional website with tons of option and marketing tools, one low monthly cost, and you can have more than one website there designed, by the way. And of course, DLP Capital, where they offer bridge debt financing to multifamily operators or to large developers of single family and multifamily properties. And we can't forget about fundingforproperties.com, where they offer sources for multiple forms of financing, whether that's rental property financing for long-term rental loans, new construction financing, fix and flip financing, or anything else that an investor could possibly need. If you have a product or service that you'd like to share with us, please reach out to us at hello@reiknowledge.com or hello@fuelforbusiness.com, and we'll be happy to listen to what you have to offer to our readers, our followers, and see if there's a good match. Now let's dive into our nugget here. What is the Great Pause? So you might be asking yourself, just what is this great pause? It seems that things gain more attention when they place a name on it, like storms, hurricanes, etc. So once they place a name on it, it kind of goes viral. So the great pause is what some are calling the current housing market. Why would they call it? Well, let's take a look. The great pause is what some are calling the housing market because the housing market was cruising just fine until a certain point of 2022. For the last several years, maybe 10 or so, the housing market has been flourishing. Sales were strong, values were increasing, some markets stronger than others, buyers were getting favorable terms on financing, etc. It was a good time in the market for real estate. Investors were buying, homeowners were buying, and it was referred to as the seller's market because houses were selling as fast as they were listed, sometimes beyond even the asking price. The market had movement. Then, with the rising adjustment of interest rates, making it more costly for a borrower to borrow money and perhaps more difficult to qualify for a loan, the market started to slow down. The second quarter of 2022 saw slower home sales than the first quarter. The third quarter of that same year saw even more slower home sales, and by the end of the fourth quarter, the home sales were at a slow crawl. Now we're talking about the year 2022, which of course now we're in the early part of 2023, so this just happened. Now we're in the first part of 2023, and realtors' offices and mortgage companies are starting to look like ghost towns. In other words, people are not buying. Why aren't they buying? Because interest rates are up. They can't qualify for what they want. So they're choosing, well, maybe I won't buy right now. Buyers are pausing. Not just homeowner buyers, but real estate investor buyers are pausing too. And that applies across both single-family purchases and multifamily purchases. What's causing this pause? Well, multiple things. Some home values have begun to decline. The sellers may be asking more than what the market dictates that the current value can be. So buyers will not pay more than the currently appraised value. Sellers are holding fast on what they'll take. So it's sort of like a stalemate. Sellers want more, buyers are willing to want to pay less, so nothing's getting done. Homeowners may not qualify for the home that they want, and rather than settle for what they do qualify for, they're just saying, well, we won't buy right now. Real estate investors are uncertain if property values will continue to decline, and if so, by how much. So they're having a difficult time making figures work in their calculations because they can't figure out what to plug in there for what the future value is going to be. It becomes hard to calculate. And they don't want to miscalculate because then they could end up underwater. Multifamily investors are seeking new purchases or experiencing similar issues. The sellers want more, but the buyers want to pay less. The rise in interest rates makes it difficult for these deals to do what they call pencil out. In other words, make the numbers work because the mortgage payments are too high for the rental incomes coming in. So these situations has caused many active buyers to pause from buying and sellers to pause from selling. With all this pausing taking place, this is where they came up with the name, the Great Pause. When will it end? Well, that's a good question. There's much speculation that some say it'll end soon, like 3 to 6 months. Others will say it'll take longer, like 12 to 18 months. Honestly, we just have to ride it out and see, because they may continue to raise interest rates, which may continue to cause the market not to move like people want it to move. So that's why they call it the Great Pause. That was our nugget for today. We welcome you to engage with us online at our Facebook group, as well as our Facebook page, REI Knowledge, and our YouTube channel, which you should be a subscriber to if you're watching this video. And of course, subscribe to our free online newsletter. It comes out weekly, reiknowledge.com. It always has 2 nuggets and at least 1 news bite in it, so you can gain knowledge, resources, and contacts for your real estate investing business. Whether you're a novice just getting started, an intermediary of a little bit of deals under your belt, or a well-seasoned investor with lots of rentals or lots of flips, or a combination of both. There's always something in there that you can learn from, because again, it's put together from experiences of deals done in the field, in the trenches, lessons learned, mistakes made, and those things passed on to you so you can learn from the mistakes, leverage the successes, gain the knowledge from those seasoned minds. We thank you for your time listening, and we will see you on the side of another issue. Have a great day.